Hey guys, welcome back to another video, and today I'm here to talk about two growth stocks that are just way too cheap to ignore. I mean, these companies are very undervalued. They're stocks that should be trading at a much higher multiple, in my opinion, and I think getting in right now is a no-brainer for both of these companies. So if you do enjoy, be sure to smash that like button. Also, subscribe to the channel. I really do appreciate the support. We're almost at 600 subscribers. As of recording this, we're 14 away. So appreciate you guys so much for that. Let's get right into it. So let's see the first stock here that we have that's a growth stock that's too cheap. CELH. This is Celsius Corporation. Celsius Holdings is a very amazing stock. This is one that's returned a very nice amount. It looks weird on the day chart because it is currently 12 in the morning. I'm recording this video very late, but I wanted to get you guys this video and was busy all day today. So we see Celsius in the past 3 months is up 27%. Year to date, it's up 121%. 121%. Celsius is a stock that has had a very good run, but it's still cheap. This PE ratio, not accurate at all. This is very out of proportion. Their market cap is 15 billion. We compare this to another company that's also in the same industry that's very similar, Monster. They have a market cap of 65 billion, and we're going to go into right here on their earnings report on why I think Celsius is going, not if, not, maybe Celsius is going to be bigger than Monster and what Monster has built. So let's go into their earnings report right here. We see it's not just Celsius. Celsius and PepsiCo expand long-term strategic partnership. Celsius now owns Alani Nu. You guys already knew that. Alani Nu was already something that Celsius owned, primarily focused towards the female consumer base, going to the gym. But now they also own Rockstar. Rockstar Energy is what Celsius also owns. So they're hitting every nail on the head with this. They have the Celsius drink, which is, this is the Celsius that you guys know and love. Go to the gym. You need some energy drink. Alani Nu, same thing, except for females. It is very good at what they do. And then Rockstar, just the classic energy drink, just one that, is a staple, very common. People know Rockstar as an energy drink brand. We get into their earnings right here. We see their energy captaincy farther aligns incentives to strengthen relationship with PepsiCo and go-to-market strategy. So Celsius is strengthening their relationship with PepsiCo, which can only mean good. This is only a good thing. Celsius strengthening that relationship is a great thing to see, and I'm very excited that they're doing that because Pepsi knows what they're doing. Ever since Pepsi bought this company, we'll see on, down here, but it's been good. It's gone up a lot. I mean, Pepsi before Celsius, Celsius before Pepsi wasn't the same as Celsius after Pepsi, that's for sure. So they deepened the strategic partnership, and then they also expanded reach for Alani Nu, which is great that they're doing the same thing. So what Pepsi did with Celsius, they're doing the same thing with Alani Nu right now, which is, expanding that brand name, getting it into more stores because Pepsi has that pull. Pepsi can do that for these companies, and they're going to sell a lot more Alani Nu coming up here. I'm very sure about that. So commercial control over energy portfolio strategy and execution, unified strategic. This is just a lot of, mumbo jumbo, like, oh, we're going to do better. But I do believe it. I think that this is what you really have to pay attention to. So this is Alani Nu currently at 87%, and then Celsius post PepsiCo. Alani Nu current 69%, Celsius post PepsiCo. These metrics, so this is the current percent of ACV in Celsius or Alani. So PepsiCo distribution, grocery, and convenience. So this is going to be distributed a lot more. Alani Nu current, and then after the distribution, what Celsius did is a lot higher. Alani Nu is going to have a lot more sales. They're going to be in a lot more stores. They're going to do a lot better. Strategic partnership between Celsius Holdings and PepsiCo creates a unified and highly complementary total energy portfolio serving more people in more places more often. This is very true. Celsius is everywhere. Celsius is at the gas station. It's at, your local Target. And then you go into Costco. It's also at Costco. You may even find Celsius, in the airport. People are getting Celsius everywhere. It's a beverage that is, attracting a large crowd. People want to have Celsius, very often. We see that 2024 sales platform 2.25 billion, 20% category share, 20% category share, high growth portfolio scale, and then we also see, this is what I really like to see, is that they're hitting every single category. So better for you, Celsius. Celsius is better for you than Monster. It's better for you than Red Bull. It's better for you than Bang. It's better for you than C4. It's better than you for all these other energy drinks. Is it actually? I don't know. Marketing wise, for sure. Functional beverages, Alani Nu. This is, hitting the nail on the head with this female focused, flavorful, and social first modern energy. This is exactly what we're looking for. I mean, they're attracting a specific crowd, and that crowd that they are attracting, they're doing very well. They're, capturing this consumer base very well. They're doing a great job with that. And then we have Classic Energy. Classic Energy with Rockstar. Classic energy drink flavors and formats and attitude. Rockstar is the classic drink. If you guys want an energy drink from the gas station, let me get a Rockstar. What is your, friend's older brother that's playing Call of Duty in your mom's basement drinking? Probably a Rockstar. Classic energy drink. And then Celsius is, none of those two. A little closer to Alani Nu, but performance forward, zero sugar, fitness lifestyle, and energy. Celsius, the branding is amazing on this, by the way. I mean, just honestly impeccable. Very nice what they did there. But also, this is a very important metric as well. This might even be more important of a metric. We see that Celsius is number 3 in the energy drink category. And that's behind these huge players like Monster, Red Bull, just huge companies. I mean, you saw Red Bull actually isn't publicly traded, but you saw Monster's market cap. If Red Bull was publicly traded, it would be even more than that with 36% category share. Monster's at 27. So these are very big companies right here. And Celsius, with them expanding out, I wouldn't be surprised if Celsius, acquired C4, Ghost, Reign, Nos, Bang. I wouldn't be surprised at all. They have a 20% category share with this combined portfolio. I think that they are going to overtake Monster very soon here. And when they do overtake Monster with this combined category share, it's going to be big for the company because next is, Red Bull. Next is Red Bull, which is going to be hard. But once their retail sales add up to more than this, they're going to be in contention for that, $45 billion market cap. And with their PE ratio, this company is going to be worth a lot more than Monster Energy. So I really like to see that. Rockstar Energy is additive to a total energy portfolio. We already talked about this. We see that they actually do $640 million plus in U.S. retail sales, which surprised me. Because Rockstar, I don't really hear a lot about these days. I know that it was a lot more popular back, a couple years or maybe a decade ago. Monster or Rockstar was a lot more popular. It was kind of, the rage. It was pretty popular to be drinking Rockstar. I don't even know. That's just what I've heard. Leveraging Celsius Holdings' capabilities to drive Rockstar. So the fact that Rockstar is with PepsiCo now, very happy. Very happy to see that. I think that's going to bring great things to the Rockstar company. It's going to do things that they could have never done. So leverage Celsius Holdings' proven capabilities to disrupt the energy category. Rockstar, I wouldn't be surprised if we see a rebrand or just new flavors. We're going to see something for sure. Because Rockstar is doing good, but Pepsi knows it could do better. That's the thing about Pepsi. They know things can do better. Because Celsius was already doing good. Alani Nu was doing good. But they have that, they are the key winner in the drink category. Let's take a look at Pepsi stock right here. I mean, obviously you guys know about Pepsi Soda, but Pepsi and Coca-Cola and both these companies are huge. They $194 billion market cap, and they pay a dividend of almost 4%. Great to see. I mean, this is a company that knows what they're doing in the food and drink sector. If if you're curious, I'd say look up actually what PepsiCo owns. Pepsi owns a lot of drinks that you guys probably wouldn't even know, which is really surprising. They're just a conglomerate, honestly. I mean, their Pepsi is very popular as it is. Pepsi and Coca-Cola, big, competitors. Coca-Cola also owns a lot of brands. We're not here to talk about that today, but Coca-Cola owns a lot of different drinks as well. It's just what they do, these big names. So key takeaways: energy captaincy farther aligns incentives to strengthen relationship with PepsiCo and go-to-market strategy, expanded reach for Alani Nu, addition of Rockstar, and then improves long-term financial structure and cash flow generation aligns incentives. Celsius. So that's my reasoning for Celsius. I'm very happy with Celsius stock so far. I've gotten a pretty good return on it. If you guys want to see right here, over 100%, almost $1,000 return on Celsius. I'm happy with that. I think that there's a long way to go for the company. I don't think that's the end. I think that, this company is going to be $100 stock again. It's going to, surpass its all-time high for sure. We see, I think that was more than 82, if I'm not mistaken, 95 about it looks like. That's where the company was all time. In the past year, this company's up 95%. So there was a lot of, ups and downs in this company's history, but I think now we're looking like probably going to be more on an upward trajectory unless something crazy happens. So growth rates for Celsius looking very good. Unless some crazy study comes out, which is always a risk. Unless some crazy study comes out that Celsius is insanely bad for you that we already don't know about. We know energy drinks probably aren't the best thing for you. That's just, we just know that as people. But Celsius, as far as, energy drinks go, is probably one of the better ones. So Celsius Holdings, I think this stock is a buy right now. You guys might think it's expensive, but look at all time. This is a company that was almost $100. Very expensive maybe there, but for $58, I think it's a better company than it was when it was worth this. You see that it's spiked very fast. Wouldn't be surprised if that happened again. They're going to report earnings pretty soon here, if I'm not mistaken, in about a month. So I really wouldn't be surprised if that happened again. I mean, look at what they did last earnings. Not surprised if they do that again this earnings. So that's what I have for Celsius. I think they're a buy right now. I'd very much recommend getting some Celsius stock. Not financial advice, but I do like Celsius stock. And then a stock that I like even more, that you guys know I like even more, is Cheesecake Factory. Cheesecake Factory is a $55 stock. This one had a tear at the beginning of the year. It's still up 15%, and it's also paying almost a 2% dividend. Doesn't hurt. But this one is, it was on a crazy tear. It was almost $70 at one point. Now it's $55. Great time to buy some more of it. My average cost is up a lot on this one because I've invested a lot more money in this company. I just put, around $300, $400 more dollars in this company. You guys saw me make that live buy of Cheesecake Factory. For some reason, the $500 buy didn't go through. Not sure why. So I picked up, I'm not sure how many shares of it I picked up exactly, but we see that now I own 16.4 shares of this company, almost 16.5. Definitely want to get that in the 20 range. Might even do that on Monday tomorrow. Who knows? I really like Cheesecake Factory at this price. Because the thing about Cheesecake Factory, we'll go through their earnings in a second. You guys probably know already if you watch this channel, but Cheesecake Factory is not Cheesecake Factory. As much as that doesn't make sense, it makes a lot of sense. You guys are going to see in a second. But Cheesecake Factory owns Fox Restaurant Concepts, which is, how they found these other concepts, which are their winning concepts, which are North Italia and, more impressively, Flower Child. You guys probably have no idea what those are. Maybe you do. Maybe you know what North Italia is. Maybe you know what Flower Child is, but you don't know that they're owned by Cheesecake Factory. So Cheesecake Factory actually owns North Italia and owns Flower Child, which are great restaurants, maybe even better than Cheesecake Factory. The growth rates seem to be higher. So let's get into the investor presentation right now on Cheesecake Factory, and let's look at how these companies are doing. So this is Cheesecake Factory at a glance. It was founded in 1972. It's been around for a long time. Very successful company with a market cap of around $3 billion and a revenue of 3.6. Their revenue is more than their market cap. Insane. Very undervalued stock. I mean, look at the PE ratio. Something else to highlight. 17 for a company with the growth rates you're about to see. Something ain't right. So 216 of the Cheesecake Factory locations, 46 North Italia locations, and 42 Flower Child locations, with 52 Fox Restaurant Concept locations. So the Fox Restaurant Concept restaurants are They're restaurants that they're testing out. They're testing out growth. There's some that they're testing out growth on more than others. So there's a few with 3 locations. There's a few with 2 locations. And there's also a few with 1 location. Maybe they're going to shut down that 1 location and try a new restaurant with a new cuisine, a new name, a new logo. Things of that sort. That's how they found these winning ideas, like North Italia and Flower Child were through Fox Restaurant Concepts. So this is a very, lucrative thing that Cheesecake Factory has been doing. They acquired Fox Restaurant Concepts a good time ago. They acquired them, and they've been doing very good ever since. And with these concepts, what they're doing is actually just, great things. We'll get into it down here. So we see that Cheesecake Factory, obviously very popular, all around the world. Very impressive, actually, their global expansion that they've been doing. I'm very happy with that. But we see that, this is kind of stuff that I'm not worried about, how much their dessert sales are growing. Basically, the main thing that I'm worried about with Cheesecake Factory, dining unit, good volume, is North Italia and Flower Child. North Italia, filling white space for an on-trend contemporary Italian offering. Italian, very popular cuisine. Menu features classic Italian favorites, yada, yada, yada. Serving lunch and dinner. Average check of mid-30s and lunch for the mid-40s. So this isn't a cheap restaurant. High volume, but also a good amount of sales. Also, they're up 2% year over year. Love to see that. So I'm happy with that. Or they're up 2% actually fiscal year 2024 second quarter. They're down 1% compared to last year, but not worried about that until the full quarter or the full year, actually plays out. And also at the same time, there's so many investments that are going to this. I mean, you guys will see down here. I keep saying you'll see, but keeps more and more information keeps unwinding as we go down this presentation. But they're opening a lot of new locations for this company. So potential for 200 domestic locations over time. This restaurant is going to be as big as Cheesecake Factory itself, if not bigger. So that just gives you some food for thought of where this is going. Currently, I have 46 locations in 16 states. Italian is one of the most popular cuisines in the United States. No lie there. Targeting 20% average annual unit growth. That's great. I'm happy with 20%. That's very fast. They're gonna grow very fast. They're gonna blow up essentially. Attractive return profile and sales growth. That's the same thing. If you guys look into the metrics on this company, very great. Flower Child, healthy food for a happy world. So look at this. I love the branding with this. I love what they're doing with the bowls. I think that everything that they're offering here is great. Potential for 700 domestic locations over time. 700. Let that sink in for a second. A differentiated concept in the growing fast casual dining segment, targeting 20% average unit growth as well, around the same locations of North Italia, except they're targeting around the same unit growth, but they're keeping in mind 500 more domestic locations over time. Healthy, balanced dining experience with organic, gluten-free, and vegan dishes. If there's one thing I've learned from, I'm actually in the food industry myself, it's that people are willing to pay more for what they want. If there's something that's vegan, and if there's something that's vegan, there's something organic, there's something that's gluten-free in comparison to not, people will pay $5 more for the vegan option. Especially at burger places. I have a friend that's vegetarian. We go to burger place. I'll get a regular burger. I eat meat. I'm fine with that. But he's vegetarian, and they say, okay, we have vegetarian patties. Oh, great. He's happy. And they're like, oh, it's $5 more. It's $7 more for a vegan patty. Okay, no problem. People are fine paying more for what they really want. And that's great. I love to see that. I mean, this, especially in this business model. And as people are more conscious of their health as time goes on, we're going to see more and more people paying more. I mean, a lot of more, but a lot of things are becoming more. That's just what's going on in this space. So I like that a lot. Separate or significant off-premise volumes, averaging over 50% of the sales are off-premise, which I also like to see. Not a lot of people are sitting down in here and eating. A lot of people like the food so much that they're willing to just get it to go. They just want the food. Separate takeout area for third-party delivery and takeout businesses. Love to see that. So Fox Restaurant Concepts. So their Fox Restaurant Concepts, like I was saying, are actually just a bunch of different restaurants. We see they have 52 locations, 11 states, and then $300 million in revenue fiscal year 2024. So this isn't nothing. We see that these are all their brands right here. So Cheesecake Factory, this is their bread and butter, literally. Their national expansion, North Italia and Flower Child. Flower Child's going to be an insane money-making opportunity for them over the next, couple decades, I think. North Italia as well, just going to be as big as Cheesecake Factory, if not bigger. Flower Child's going to be bigger than both, I think. And then the beautiful thing is we don't even know what else is going to be bigger. One of these is probably going to be bigger than these three combined. One of these is probably going to be bigger. We just don't know yet. So I really like what Cheesecake Factory is doing. There's no other there's no other publicly traded restaurant in the industry that's doing anything quite like this. If you guys can find one, drop it in the comments down below. But to my knowledge, there's no other restaurant company that's doing anything like testing all of these different brands. So the Culinary Dropout, Blanco, and the Henry are all testing growth. They could be in the national expansion talk if this growth goes well. And then boutique brands in the incubation stage. These are brands that are going good. They probably have a few locations, but not, to the point where they're going to nationally expand them or they're even testing growth yet, but probably soon. So Cheesecake Factory, you see all these locations. They're adding 2 new locations to itself. Culinary Dropout, Blanco, the Henry. A lot of locations for North Italia and the Flower Child. These are who they're expanding, the most aggressively. We look at their sale comps. I'm not really worried about this at all, to be honest, because we see that, they're expanding very heavily. I really like Fox Restaurant Concepts. They're up 2% instead of down 4%. So I like that. But as far as North Italia, I'm not concerned. Not concerned with Cheesecake Factory either. That was never, the play. Cheesecake Factory is not the play. I think they're going to do all right, but that's not the reason you're investing into this company. Their revenue is up 6%. Adjusted EBITDA of 9%. Like to see that. Restaurant count up 6%. It should be up even more at the end of this year. And then some numbers. This is what I really like to see right here. So average annual unit growth we see for Cheesecake Factory is 2 to 3%. Love to see that. North Italia is 20%, Flower Child 20%. We already knew that. And then 10 to 15% for the Fox Restaurant Concepts, which I also love to see. That's a pretty, decent amount of growth right there for those, just concepts. I like to see that. So growth outlook, average annual growth targets, 1 to 2% on comparable sales growth, and then 7 to 8% on top line revenue growth. If they can grow revenue at 8% while expanding this aggressively, I will double my position in Cheesecake Factory. I'd love to see that. And then this is what they're seeing as the market potential. So look at this right here. This is the revenue that they're getting right here. This is Cheesecake Factory is purple. We see that they have 216 locations, potential for 300. Flower Child, 42 locations, potential for 700. They're thinking the Flower Child is going to be as big as Cheesecake Factory. So Cheesecake Factory's valuation, if this is true, should double. And that's not including Culinary Dropout and the Henry and Blanco, which are also probably going to be as big as at least North Italia or Flower Child. So you can add a few of these on here. Probably $10 billion revenue for this company eventually. And it's not crazy at all. It's very, very conservative to say that, even, dare I say. So now a lot of financials here not really worried about those, because this company is in the stages of growth. They're a cheap company, I think, for what they are. This is a company that has a PE ratio of 17. Obviously, they're valued pretty low. And, in the restaurant space, a lot of companies are. That's just how it is. I mean, if you don't have growth rates that are crazy, if you have boring growth rates, you have a boring business model, but it works. This company is expanding very fast, and they're expanding, and they're making more money because it works. So I think Cheesecake Factory is a great buy right now. I think that if you do get into this company, be sure to dollar cost average up, be sure to dollar cost average down. You can never be too sure with these restaurant companies. Look at how fast. You see it was $63, very quickly dropped to $27. That was, a pretty drastic change of events. But then you see it was also 27, went very quickly back up to 65. And then we see we have a 52-week high of $69.70 right here. Do I think the Cheesecake Factory peaked at, around $69? No. I think this company is going to be $100 very soon here, honestly. I think that PE ratio is going to be looking a lot nicer. Just give it, a year or two, a couple of years. I think that PE ratio is going to be treated a little bit more respectively because of this growth potential. I think Cheesecake Factory is just misrepresented, to be honest. The fact that it's called the Cheesecake Factory, the stock's called the Cheesecake Factory Incorporation, that shouldn't be what they are. They should be the Fox Restaurant Concept Incorporation or something of that nature. There's no reason that they should be the Cheesecake Factory. It's very misleading. A lot of people don't know to invest in it or not because they're not even sure what it is. People probably want to invest in North Italia or Flower Child, but they don't know where. With some quick research, you could find out, but it's just, just make it easier. Why not? But yeah, so that's all I have for today's video, guys. If you did enjoy it, be sure to smash that like button. Also subscribe to the channel. Really appreciate your guys' support. Very close to 600 subscribers. It's a great milestone for me, very milestone for you. I appreciate you guys going on this journey with me. It is free to subscribe. It may be very expensive to buy your favorite stock in the stock market, but it's free $99 to subscribe to the channel. So appreciate you guys for watching. I'll catch you in the next one. Daily uploads as usual. Peace.